to the cloud. There we go. Again, as you work with the tool, when you open it the first time, save a copy of the workbook, give it a new name, and then use that copy the first time you go through it. And then after you become familiar with it, as you test various scenarios, again, save a new copy of the workbook, name it with a name that will remind you which scenario it is. And that way you will preserve all the functionality that's been built into the tool. What you have, and I'm going to start by going to the workbook. Hold on just a minute here. There we are. You should now be able to see the workbook on my screen. What we have is an Excel workbook with 5 worksheets within it. Each one has a different purpose. They share common nomenclature and some common design elements, which you'll become familiar with as we go through. In the workbook, and I'm just going to quickly point to the tabs. The first tab or worksheet is a summary page. There are only a couple of entries you'll need to make on that page. Otherwise, it is populated from the other workbooks. The next tab is a place where you will record your last year's actual results, hopefully by month, if you can. The next tab or worksheet is your current year budget. And as you will see when we get to that, that will also be spreading by month. The next is the worksheet called Actuals and Projections, and it's on that worksheet that you will begin to test various scenarios about the next 3 to 6 to 12 months. I want to say, as a general comment, there is not going to be a single right answer as you fill out these projections. You're going to try something and see if that solves the problem you are addressing, normally a cash flow problem. And then you may find that as you evaluate the challenges or costs associated with that solution or that approach, you're going to need to do another one. And you may find after a month that you need to revise. Be forgiving of yourselves. This is tough stuff. And most of us had not anticipated that we would be here a few months ago. So recognize that you're going to need to iterate through this. The last worksheet gives you a cash flow projection that you can share easily with those who don't want to have or need to have your detailed information that's in the previous worksheets. So now I'm going to go as a starting point to the last year actual worksheet. You'll notice when you look at yours that some rows and columns are colored. The reason they are colored is because they have formulas, well, in addition to making it visually easy to find totals, is because those colored rows and columns contain formulas. So for example, looking here in the column that says July, headed July here, the month of July, the data that you enter in the white spaces rolls up to the 2 green rows. So if you have an entry for bequests of $200, you can see that it totals up to the combined support line row, and it totals up to the income row. So as you go through, you're going to be entering data into the white spaces. You're better off not touching the colored spaces. If you do, again, go back to the original workbook, save a copy, start over again, rather than trying to, I think, modify the formula or make corrections. It's just easier to start fresh. The first thing I want to direct your attention to are that we have pre-filled for you two broad categories of income: contributed support and earned income. And then we have entered some specific categories of income that we thought might be helpful. So for example, under contributed support, you can see that we have federal government grants, state government grants, individual gifts, memberships for those of you who have member organizations, bequests, corporate and foundation grants, our dear friends at Longwood Welfare, and so on. These categories may not be applicable for you. You may wish to change them. By all means, do, but recognize that there are, excuse me, I need to admit a new participant. But recognize that if you change a category here, say in row 10, you're going to need to do that when you come to the next worksheet and to the one after that. So just be consistent if you do change any of these categories. If you can live with them and fit your income statements and expense reports into these, so be it. That'd be wonderful. So we've talked a little bit about contributed support. The next broad category here is earned revenue. We distinguish between government grants, in which you are getting, let's say, $25,000 of general support from a state or federal agency. Say a grant from the Delaware Division of the Arts would be a state government grant. And state government contracts where you're receiving, in a sense, a fee for service. You are being paid for each therapy session you provide, or you are being paid for a certain number of individuals who are under your care. We've also got in here program fees number 1 and program fees number 2. If you have a program that generates income, this is where you would record that income, whether it's a performance or a class that you offer. And you can, and those of you who are familiar with Excel will recognize this, you can add more lines if that's helpful. And then you'll notice in the expense category, beginning with this orange row, we have also program 1 and program 2. So rather than having you net the income from each of those programs, we are presenting it as putting the income in one place and the expenses associated with the program in another. Turning to that expense part, we have given you a category that aggregates all human costs. So salaries, hourly wages, accumulated benefits, all of that in one line, rather than splitting them out to program 1 or program 2. We find that the majority of organizations report them that way. Likewise, facilities costs are aggregated into a single category, and this would include lease payments. It would include utilities, any occupancy costs. We'd recommend that you report there. Professional services are payments that you make to contractors whose services are required in order for you to fulfill your mission. And I think the other categories are mostly self-explanatory. We do have, again, recognizing that we are doing a cash forecast, recognize the distinction between GAAP accounting and cash accounting. We have included loan payments in here as a line item if you have regular loan payments, because it's a demand on cash. Accountants among us will quibble with that from a GAAP reporting point of view, but this is not the purpose of this particular exercise. So the first thing we're going to ask you to do is to enter your actuals for the previous fiscal year. And if in this case, if you notice here at the top, the fiscal year hypothetically begins in July. If your fiscal year begins in January, we'd ask you to just go along and change these column headings and then enter the appropriate data in the white spaces for that month. This is a time-consuming but important exercise, as you will see when we go to the next worksheet. So go to your operating reports, decide what categories you're going to fit into these boxes or modify the boxes, and then enter the data month by month.
Hey, Will?
Yes, Paul?
If I would just interject here, professional services that might confuse some folks. We're talking about IT services and that kind of thing that allow you to run your business. If you've got any other examples of that, Will, that probably help.
Oh, IT, legal, accounting. If you have an accounting service that does your QuickBooks for you, or an individual whom you pay for that. If you, let me give an example. If you are an organization that provides classes in dance, and you have some teachers who are salaried and are full-time, but you also contract with other instructors, those are professional services, and they live in there unless they're associated with a specific program.
Thank you.
Thanks, Paul. The next tab, this is your last year's actual. Turn to the next tab, which is current year budget. And here you'll see that there is one white column, or one column with a lot of white spaces, and then a whole lot of gray over here. What's going to happen here is, in this annual budget column, you're going to enter the budget for your current fiscal year. And again, if your fiscal year starts in January, please retitle or change the headings of the columns so that they correspond to your fiscal year. And so you're going to enter in the first column the amounts that you have budgeted for the income categories and for the expense categories. And what this worksheet is going to do as you enter those numbers is it's going to refer back to what you entered by month in the previous worksheet, and it's going to allocate accordingly. So it's a calculation. If when you look at it, it does not reflect what you believe to be going to occur in the fiscal year, you can change these numbers. You will replace what the formula presents to you with the number that you believe to be correct. So you could, if you wished, take this, in this case, $125,000, which the formula has placed in August or in September, and you can zero that and put that into another month. Hopefully you won't need to do that. Many people do not seasonalize their annual budget. And so I urge you not to let this make you crazy. It's an important and helpful tool in terms of developing your cash flow. But I recognize that it may be something new to you. Again, remember what I said, you can copy, if you find out you're pulling your hair out or you've made a mistake that you can't figure out how to recover from, quit, save a new copy of the workbook. You can also, in order to not to lose your work, you can also copy and replace the current year, or the last year actual if you need to. So this gives you a projected budget for the year allocated by month based upon your approved budget. Again, remember, change the headings to correspond to your fiscal year. I'm going to pause there. Paul, do we have any questions that we need to address?
I've received a couple that were just individual questions, which I answered, but we
Okay.
had none for the whole group.
Great. All right. Well, I will press on then. The next tab, actuals and projections for this fiscal year. And what is different here is that we've asked you in the first column, that's column C here, to begin by entering your results through the end of February. So this will be your actual results, whether that's through the first part of your fiscal year, if it's the calendar year, or as far as you have gone in your fiscal year. And then you will leave these months as they are, because we do want you to look forward and determine what you think is going to happen, and to use this worksheet for you to test your potential responses. So looking at your previous year and looking at the projections, the allocations of your budget, you're going to look and say, okay, we usually get a $75,000 grant from a federal government agency, Department of Housing and Urban Development, and it usually arrives in June, but we understand that they're going to accelerate that payment and we may get it as early as May. So you can enter here $75,000 and begin to see how that change impacts your net results. Here at the bottom, the gray line is the net income or net revenue. I want to be careful and use a consistent term that results from the income that you are projecting that you will receive and the expenses that you expect to incur. You'll notice, importantly, the salary line. Many organizations that I've been talking to directly are taking as a starting point, what can we do to keep our valued employees whole? And so the first thing they do is say, what's our monthly salary expense? And let's see how far we can get without having to do anything about that, without having to change it, reduce employment or reduce overall compensation in some way. So here's where you would enter and let that intention be reflected.
So you'll notice column E, though, we made an assumption of a drop in row 27.
Yes.
Column E. But if we were starting from the place where we didn't lose anyone, that would be 35,000 all the way across.
Like that. And then, as I said, you can immediately see the impact in terms of net monthly revenue on when you go down to the bottom line. We've added a line here that shows what your average monthly expenses are. Again, notionally, that's a number to keep in mind. So you can say, well, what's our, for instance, I would say to you as a board member, what's our running rate? And you can say, well, under our current scenario, our running rate is about $40,000 a month or $50,000 a month. And then you can also see very easily how the decisions that you have made or the choices you have available are reflected in net revenue. Many of our brother and sister organizations are going to be applying for special relief, either from the COVID-19 fund that is being held at the Community Foundation, or perhaps a loan from the Small Business Administration, or perhaps you have applied to one of our foundations who has encouraged you to seek general operating support in lieu of a project that you had submitted for funding. Here is where you can make a guess about the extent of the funds you might receive and when they might become available. An important factor, I said the grant's clearly coming down here, an important factor that I know you all think about, if you are a recipient of payments from the state of Delaware, you probably have experience about when those payments are received, and it would be a great thing if you were able to check with your program manager at the state agency that makes those payments to determine whether they expect to be able to make them on time. Clearly, as I said, this is where you're going to be doing a lot of work. And to repeat, what you want to do is save a workbook, begin to test a scenario, see whether that produces the results that you need or want. And then if you want to try another scenario, go back to the original the original workbook, save it with a new name, and make the changes in the new workbook. The last and probably most important.
Will, before we go there, can I make a comment about the previous sheet?
Yes, sir.
Those of you who may have government contracts, many times they're reimbursable contracts. And if services now, because we've closed things down, are not allowing you to serve people, keep that in mind as you put revenue in those buckets. You may want to expand on that, Will, but I just wanted to point out some of those are reimbursable contracts, and if services have stopped, those reimbursements will stop.
Thanks, Paul. That's absolutely right. And there are areas of uncertainty. I know that our colleagues who are providing early care and education receive state payments based, some of them on population, and some of them based on actual numbers of people served. And so, yes, those are trailing reimbursements. And if you're not providing the service, you may or may not get paid. Department of Education has not been entirely clear about some of those. So again, you're going to have to do some research. Thanks, Paul. So this last worksheet brings everything together. And the most important thing on this worksheet that you're going to do is you're going to enter in this box up here the amount of cash, what we've called it is cash on hand as of February 29th. Now, for some organizations, what I'm talking about is current unrestricted net assets. And your balance sheets may be prepared in a way that makes it easy for you to identify what are current unrestricted net assets. And in the instructions, we've provided a definition. But if your income statement and balance sheet are not that complex, enter in here what you've got in your checking account, and if you have a savings account, what's in your savings account. And if you've got any realizable receivables, that is money owed to you that you are highly confident you will receive, add that in. And that's what we mean when we say unrestricted cash on hand. And then using that number, this worksheet will take the results from, for instance, your net revenue, and will produce an ending cash balance along here. And this will tell you how many, as you can see, it will calculate how many months of operations you can sustain with that amount of cash at that level of income, at the levels of income and expenses that you have projected. In the worst case, it will show you when you run out of cash. Now, I can't advise you in a general sense about what's going to happen over the next 3 or 6 months. Many organizations are planning to be disrupted for at least 6 months. So as you go back to the actuals and projections, I would say work your way out at least 6 months from March 1st, and maybe throw an extra month in as well. And then remember that startup is not like going back to normal. There will be expenses associated with restarting for some agencies. And so in your projection, if you believe that you will be starting back up again in, let's say, July, and you have shut down your facility and have not had any occupancy prior to July, then you may have extraordinary expenses in terms of cleaning or other things that you need to do to prepare to resume normal operations. And those may actually occur in a previous month. So as you do this, remember that to allocate or to consider what your startup costs are likely to be as you get back, we hope, to something resembling normal operations. Let me see what else I'd like to be sure that you are aware of. I think that covers pretty much the use of the workbook. There's really only one way to get comfortable with it. That's to sit down after this call and start trying to enter data. Paul, do you want to talk about what support we have available and how people can get help if they need it?
Yeah, we actually are going to put up on the website a place for you to register if you desire some help, for example, on loan applications. We're going to have some volunteers who are providing their time and expertise to do that. We're also going to have folks that can help you use this cash flow tool. If you're just totally uncomfortable, boy, I just don't know how to use this. There'll be a place on our website. Not sure that it's up right now, but it will be up shortly for you to register for that kind of help, and we'll make a connection there. I would also say that you should download from our website the most current guidelines and tool, just to make sure you've got the most recent one. We hurried to get this out, and so one of the previous versions did have a formula error in it. But if you can go to the website and download those, you will have the current and correct version.
Some of you I recognize, and you know how to find me with my email address. If there's something that I can do, either send Paul a note and say, you know, would you ask Will to get in touch with me, or you can reach me directly. As I said, I'm not an accountant, and I'm certainly not an expert in your specific organization's needs, but I do have some experience in confronting challenges like this, and I'd be happy to chat if that would be helpful. Otherwise, if there are, and Paul, I'm not seeing any chats at this time. That's about the end of the presentation, unless, as I said, we'll wait just a minute and you can say, oh, no, wait, I had a question. But otherwise, thanks for being with us and good luck. Paul, over to you.
So we actually have a good number of people on this call that you could actually ask your question, unmute and ask your question at this point. We've got some other workshops that have as many as 30 people in them. And so that's makes it a little unwieldy. But if you have a question and would like to unmute and ask the question, please feel free to do that. If not, we'll finish up. Okay. Well,
Okay.
thank you all. Please let us know if we can help in other ways.
Thank you.
Thanks
Very
everybody.
much.
We will put this recording, make this recording available. So look for that as well.
Okay.
Thank you.
Thank you.